Hello everyone, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 1st, 2010. Now, our first position for tonight is going to be in the iShares Comex Gold Trust, the IAU. Now, what we're looking at, we're switching over to an ETF. We've got some extreme volatility in the markets with the commodities, the crude oil moving lower, gold's moving higher, the US dollar is basically flat. So what we're doing is we have this volatility in the equity market, so to kind of avoid that, we're going to get into something that's we're seeing a nice trend in. Gold looks like it has a considerable amount of room to extend, so we want to try and exploit that, but at the same time limit our exposure to the market. Now, with this ETF, we can see that we've got the triple EMA cross from Vantage Point has taken place about the beginning of August, so it's had a nice move up. We can identify 1208, 1219, and 1219 as our three major levels of support now. So what we can also surmise from this is that we're still clearly in an uptrend. Gold has room to extend, but it has been moving higher for about 3 weeks now. So we want to go through, check our crossovers. We can see we have a nice wide gap here on this long-term crossover. It doesn't look like we have a reversal coming anytime soon. Looking at the medium-term crossover, I'm just going to bring this up so everybody can see. Again, we have a very wide gap between the predicted moving average and the standard moving average, and this indicates a very strong trending market. Now, our last crossover is our short-term crossover. Now, we also want to look at that and see what's happening to see if there's any sign of weakness here. Now, we can see even on this there is not. So what we want to take from this is now we want to get into a buy position, and where is the best place to do that? So what we're going to do here now is we're going to go into our daily report from Vantage Point, get our predicted low and our predicted high for tomorrow, and then narrow down that entry point. Now, again, we're looking for a smaller move here, but we would still, if we can get this at a decent price, we should still be able to get anywhere between 80 to 90 cent an 80 to 90 cent move on this, which is a very good move. Now, 1213 is our predicted low, 1237 is our predicted high. So your day traders, that's the range you're working with. I realize is very tight, but you would simply buy more shares or buy shares on margin, whichever way you want to do it. And your longer term traders would look to and medium term traders also, I can't stress enough, is that we should be looking for a move back towards $12.80, $13, and if we're getting $1 gain on a $12 share, that's a very, very good move. So let's have a look at the chart and see if we can actually get that. So 12.13 to 12.15 is going to be our entry point. 12.19 actually makes sense to me because we can see we've got our support down here at 12.08, so all stops will be below that level. Now, what I want to do here is point out with this gold trust and how the other ETFs are really coming under pressure here. Now, I want to point out how there's very little correlation specifically to the gold trust to the S&P 500. Now, looking closer at this, we can see that the S&P 500, as it's aggressively moving lower, and if we feel that the equities are going to continue in this move lower, then this would make sense that the gold trust would continue to move higher. Now, if we look at some of the other things that are correlated to this, we can see that actually the US dollar index is somewhat correlated to the gold trust. Now, I don't believe that this US dollar index move is going to remain to the upside, but it's possible, so we're going to wait and see how it plays out. But right now there is definitely a correlation there. Now, if we look at some of the other ETFs, we can see the other ETFs, the equity-based, stock-based ETFs are essentially all under fire right now, and the correlation is very high right across the board. So you can see that the industrial spiders are getting hit, the financial spiders are taking a hit. All of them are, the correlation is basically about 100%, yet the gold continues to break away from the equity trade and moves higher on its own. So again, tomorrow I think between 12.19 and 12.13 is going to be our entry point on this ETF, and again we're going to be looking for a move back up over that 12.50, 12.80 mark. So if we can get a return of 5, 10, 12% on our investment in this ETF over the course of the next few days or few weeks, that's a very, very good return on investment. Now, that's our first position for tonight. Now, for our second position, we're going to go into the foreign exchange market. Now, looking at our second position for tonight, we're going to be looking at again the US-Japan currency pair. Now, the pair, you can see we have a couple of candlesticks, one that is spiked clear above the 18-day predicted moving average, but Vantage Point obviously would not budge on this. We can see that we've had a very significant move down, but it's been a very controlled move. It hasn't been a quick snap, a whipsaw lower. It's essentially moved in a steady fashion straight down. So myself, I can't see any reason other than intervention from the Bank of Japan that would push this higher, and that seems extremely unlikely at this point. So right now we have a good risk to reward trade here. We've got our 18-day predicted moving average sitting at 85.29, our 8-day at 84.81, and our 3-day at 84.56, excuse me. So for now, what we're going to be doing, we can see that our predicted true strength indicator right here has again crossed over the trigger to the downside. We are in oversold territory, but again, it's slowly working this off. Now, there is a very high correlation, obviously, to US-Japan and the currency and the equity markets, excuse me, but for now, this is a very clear trend and we want to continue to follow it. So let's now go into our daily report and see what we have for our predicted high and predicted low, and then we're going to do a little bit more analysis on this US-Japan pair. Now, looking at just some of the closes, you can see that we've closed at 84.22 today, 84.60 the day before. Last week we closed at 85.24. The market was convinced that the risk trade was back on. Everything was pushing higher, but we can see that that was on a Friday. Now on a Friday, once we come back in on the Monday, the market very quickly goes right back in to selling. Now this is why a lot of days on Friday you want to limit your trading, because you have profit taking, a number of different things can cause false price action, and I believe that's what's actually happened on the US-Japan pair. So for tomorrow we've got 85.06, 83.66, which is another aggressive move if we can push into that area. So 85.06 is our predicted high for tomorrow. Our neural index is turned down after 3 up days. We've now returned to the negative. Our predicted short, medium, and long-term differences all negative. So let's go in now. Let's have a look at the 3-day predicted moving average from Vantage Point and see if we can actually use this as a pivot point to get back into that short position. So we can see that our 3-day predicted moving average is 84.56 and we're 84.81 on the 8-day, and again 85.29. So we're going to be looking to get into a short position, I think, between 84.56 and the 85.02, which is the Vantage Point predicted high for the day. I have a feeling that this 84.81 area is going to hold, and then the sellers will aggressively move in. So with that said, we're going to run through these crossovers and see if we can see any sign of this beginning to show any signs of weakness, that US-Japan may actually be getting ready to turn to the upside. Now we're going to look at the short-term crossover here and see what we have. We can see that the short-term crossover is now making its move to the downside yet again. Now, with the short-term crossover again making the move to the downside, that suggests we're going to get into another downward move. Looking at the medium-term crossover, this indicator from Vantage Point carries an accuracy of probably about 85%. So if this thing crosses over to the downside, it's a very good indicator that this thing is going to move lower. Now, again, the only thing that concerns me is the distance in the gap between the moving average and the predicted moving average. Now, looking at the long-term crossover, again, we have no crossover here whatsoever. So everything suggests that the US-Japan currency pair is going to resume its downtrend. Now, again, we're going to have a very volatile week ahead with the non-farm payrolls, and the ADP report is on Wednesday morning, so we have all these things happening. We're going to see a lot of volatility in the currency markets, but again, the primary trends appear to be still in place. Now that's dependent on the equity markets, the jobs number. So really for a week like this, it's certainly a good week to limit your trading and keep your stops relatively tight. So on the US-Japan pair, we're going to have our stops sitting at about 85.50. Only about a 60 or 70 point risk. I don't see any reason to risk 100, 200 pips stop loss in this particular case. I don't see that at all. So to start the week, or in the middle of the week, excuse me, we want to really just kind of focus on what's going on with that report and just limit trading in general until we get into September. So those are the market positions for September the 1st, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.